Okay, good morning, everyone, and welcome to our training proper, our weekly market outlook class, where we'll be looking out for opportunities in the market for today, for the week. Today being Monday, the 25th of April, we'll look at trade setup, we'll look at the weekly forex factory, we'll look at financial expectation in terms of financial reports. So we're going to begin by looking at what are the expectations today being Monday, April 25th. What are some of the major market news that we can expect to probably move the markets much more? One of the main reasons I look at this is now I'm not a news trader. I don't trade fundamentals in itself. But what I do is I need to pay attention to them so that I can either take advantage of, basically look to take advantage of them, and also such that we can look to position ourselves in the best way, such that let's say we have open trades, we want to know probably set particular times to either manage our positions or stay away from a particular instrument, maybe because we're expecting high impact news and we don't know exactly what the outcome would be. So for the week, if you can see on your screen here, you'll see that today being Monday, we just have two major reports. I only pay attention to medium impact and high impact news. I don't look at lower news. So that's why I filtered out my own to look like this. Anybody, if just thinking about it now, if you guys want me to probably make a short video on using the forex on the forex factory platform, and just make a video or a training on it to explain how to use, explain some of the things about it, just probably put yes in the chat box, and I'll do that later. Just put yes in the chat box. Okay, so straight up, today being Monday 25th, we have two major news. We're looking at the euro, the German info business climate. It's more or less this one actually is out. It came out 9 o'clock a.m. this morning, and it came out better than expected. So it's actually good for the euro, right? And then also by 4 p.m., we'll also be looking at the Canadian, Bank of Canada governor speaking, which is McClem. So basically what traders tend to look at is how is the report coming out? Is it bullish? Is it hawkish? They look at that and try and figure out what to expect. Okay, and then for the other section of the week, we also have some news from USD on Tuesday, not high impact, but also would have some implications. So we have the core durable goods. We also have the CB consumer confidence. So the expected, the outcome of this report would, at these times stated here, we could cause some volatility in the markets. And then, so one of the key things I want to pay attention to is this. So for the week, I'm looking at Wednesday, especially for the Aussie. So the CPI and the trimmed mean CPI is high impact news. So basically, the CPI is the consumer price index, and the outcome, analysts are forecasting that we're going to have 1.7 on the CPI QQ and 1.2 on the trimmed mean CPI. So the actual result when it does come out would be something that I would want to watch closely, because the Aussie is set in such a way that it should move somewhere, especially things like the Aussie yen, things like the Aussie New Zealand, the Aussie, the Euro Aussie. There's kind of some sort of expectation in this instrument, and the outcome of this could serve as a catalyst to produce probably the next aggressive move. Okay. And then you go to Thursday. So on Thursday, we'll be looking at reports from JPY. I personally want to be able to see or at least know the outlook of the BOJ reports, whether we'll start seeing some yen strength, because the yen is overdue for some strength, and this could serve as a major catalyst. So Wednesday, Thursday, although the thing about this one is tentative, meaning that there's no exact time, but it's going to be during that day. And then the other one you want to keep in mind is the USD advanced GDP QQ, and also on Friday, the CPC and PCE index. Right. So basically, it's not a very busy week. It's a week that contains some activities as far as the market is concerned, but it's not extremely busy. So which is good. So one of the advantages of this is, well, you're not going to have some stupid irrationalities because of crazy reports. Okay, but either way, we pay attention to that. We want to figure out what to avoid, when to avoid them. Now let's jump straight to what we're here for, which is looking at opportunities, some of this instrument, and look for opportunities or potential market projection for the week. Okay, so what I like to do most of the time is I like to start with looking at the DXY. So the DXY is the dollar index. and it measures the strength of the greenback against all the major instruments. And if you look here, the dollar index has been on a tear. The dollar index has been extremely bullish. It's been rising like no man's business, and to good, for good reasons. So looking at this while, okay, so obviously this zone wasn't respected as we were looking at, so we have to probably let that go. We were trading, you can see we've been trading within this bullish ascending channel, and then we ranged a little bit here before breaking out higher. Now I remember mentioning this range here, and I said this range is very important because a breakout one way or the other is going to push, is going to be the start, is going to be the catalyst for an aggressive move. Now I also did mention that I was expecting that we could see this break lower because, based on the, just looking at this from a technical point of view, that is the most, what I call it, the most viable, the most likely outcome, looking at how we're coming up from a bullish market. We're also coming up from multiple confluence of resistance. But I also mentioned that in order to do, I don't want to start selling, looking for dollar weaknesses immediately. I would want to see a break below this low on the DXY, and then hopefully a break below this trend, channel support to then take price lower. Okay, but for now, we have broken higher, and since then, what has happened is the dollar has continued to strengthen. As you can see in most of the instruments, you can see euro dollar has been very weak, pound dollar has been going down. Dollar yen is actually ranging, but it has actually been very strong, at least during this period here. So looking at where we are now, you can see even today's candle, is already aggressively bullish. There are a few things I would want to keep in mind here. So if you zoom out here, you'll notice that, there's, we are looking at this area of supply here, right? Where price could potentially, that area could potentially serve as resistance. So with price breaking away, so with the market breaking away from this resistance here, the next potential one is going to be up here. So what that means is we could continue to see dollar strengthen, probably till we get all the way up here. Now remember, we're looking at the DXY. We're not trying to trade the DXY. We're not trying to trade the dollar index. The reason I look at it is because it helps me see what to expect from the dollar in terms of, at least against most of the instruments. If the DXY is showing dollar strength, then you're going to see dollar strengthening against most of the instrument. Okay, so basically we are actually sitting at around this. You can see how this area here could potentially hold. So today's candle close is quite important. If the market were to successfully close the day, okay, it already seems it has, you could see here. So basically the part of this resistance is actually to move on higher. Look at how this area here, price blew past it. It then, found some selling pressures and then continued to blow past. So the part of this resistance, which is how I like to trade, is for dollar to continue to strengthen. And if we're looking at a continuous dollar strengthening, now this is what we could potentially expect, a continuous dollar strengthening, in which case, if we continue to grind our way up, we could find potential resistance here. The other likely scenario is that probably we come back down to retest this broken resistance, don't support, maybe grind our way up. So now with this in mind, with that outlook on the dollar in mind, let us look at some instruments. So let's begin by looking at the euro dollar. Now the euro dollar is, so euro against USD. So the euro dollar is sitting at a very key point. So I'm going to, okay, so now the euro dollar is currently sitting at a level. Now I'm going to move up to the weekly chart so you can see more what I'm trying to explain. So if you look in here, you notice that if you look at this, right? So this is a multi-year chart on the euro. So from June 2008 and all. But look at this area. So I had this Wyckoff schematic labeled here. where you could see how we ranged for, I think from 2014 to like 2017, price range was ranging within this region here. And what you notice is we broke out of that range here. Now, for those of you who understand Wyckoff, you understand that how the market moves most of the time is, let's say the market has been dropping and then the market, what we call accumulation, smart money are accumulating, you find the market range, probably break down to clear out liquidity that rests below here, and then show its sign of strength by breaking out above the high. So clear the liquidity at the bottom, clear the liquidity at the top, and then come down to retest probably some of the last order block to then proceed higher. So this kind of pattern is what I like to call weak to strong hand transfer, where the market ranges, shows its hand, clears up, and then moves. Now, in most cases, in many instances, when that happens, what you tend to find is, so look at this, we had this accumulation here, we had our sign of strength to break out here. We did come back down to test this last OB, to this last order block, and then we pushed higher. Now, from the concept of, from the idea of, from the idea of the bullish trends, you'd want to see this move take out this high here to then continue to go higher. However, we did fail to make new highs. We instead made a lower low. So what it means then is, if this schematics is even correct, right? So if this schematics that we labeled here is even correct, then price needs to stay above this low, right? So if this schematics here is correct, if the market, if this was the actual accumulation, and it's not about if it was correct, it's about if the composite man or smart money, or the power that be is more or less are trying to take price to higher prices, then they have to keep this low intact. That means this low has to be held. Now, I know that the absolute protected low is this one resting below here, but as in line with the story we're telling ourselves, this is the protected low that price needs to hold. Now, why am I explaining all of these things? So the point is to look at where we are in time with that story we tell. Now, with that story we just told ourselves here, you can see that this, this is the actual low here. So this second one here is the actual low that price needs to stay. If buyers want to push price higher, they have to defend this low. Now, so I already highlighted this area here. I've already highlighted it as an area where I'll be looking for confirmation, looking for bullish opportunity to continue moving higher, and we are sitting just there. Now, if you look at this, so this line I draw here is the 50% fib level of this range that I have identified. So what I would, I kind of expect this area here to hold. Not necessarily, I'm not saying it must hold. I'm saying if buyers are really interested in defending this level, then this area, this low here should at least hold. Now, here's the good thing. We don't need price to break up like this. We don't need that, right? If it does that, well, that's fine, but we don't need that. What we're looking at is, even if price comes to this area and even retrace just this high, that is enough for us to make what, 300, 200 pips, right? If it continues to deliver us more profits, well, fine, we'll trade that. However, we don't need this aggressive move up, even though I expect at some point we have to come back to this area. Now, but the good thing about having areas of interest, planning your trade like this is such that you can have a story you're looking at trading and then have a reason for looking at it, right? So with that, we're saying, okay, this area here, so I'm going to zoom in. This is the weekly chart. So this is, even though it looks like, just one small candle, there's a lot of movement. This area here is very, very important if price is going to continue bullish. Now, so here's what I'm going to be looking out for here. So let's go down on our top-down analysis and go down to the daily chart. Now, if you look at the daily chart here, we are currently, we're not very far from it. If to measure, we're like what? Let me see. What this is 60 pips, 100. Let's say about 100 pips from that low, right? So about 100 pips from that low. So not very far. We could see price come down into this zone. Now remember, we are looking at the TX when we're saying we're likely going to expect a stronger dollar. Now, a stronger dollar would mean that would see the euro dollar go down. Sorry. So that's it. With that said, what I'm personally looking for, I want to see a potential push into this zone, right? Maybe even this zone. And then I want to be looking something like maybe a trend line break, a counter trend line move, a break of structure to then look to start buying and take this higher. So here is what I will be looking out for. Remember, this is market outlook. I'll give you my outlook and my potential trade idea. Now, if you drop down to the 4-hour chart here, you can see, so a couple of things, we can start planning the trades. Remember, like I always mention, successful trading is not about opening and closing trades. It's about planning your trade such that you can then make it, you analyze the market doesn't have to do what you've analyzed, right? I remember, I think in I think that was on Friday or on Thursday, I did give out one analysis on the Telegram channel to those of you guys who have funded your accounts who are with me on that channel. So I think it was a 15-minute chat, right? I'm sure some of you remember this chat here. So if it would just load up. Okay, so it was here, I think. I remember, I'm sure some of you guys will remember this particular trade setup that was given out on the Telegram channel. As at the time, price was, I don't know where price was. I think price was already looking like it was breaking structure here. We were looking to buy our stop loss below here, and instead price decided to go down lower. So that was a small loss, but that was also fine. Now I got it back at a sell after the structure was broken, but that's not the point here. The point is you plan your trade, you have a bias around it, and then you look to execute the trade once those criteria are met. Now, I was looking for a short scalp this morning, looking to see price come back up toward this area here and then look to set it back down. So far, price has not done that, but I still kind of expect you might see that move upwards, right? But that one is just this short scalp. Now, with what we are trying to do here, here's what I'll be looking out for. You can see that the market is clearly bearish, right? You don't need the soothsayer to tell you the 1-hour chart market is bearish. You could see how we're ranging, respecting this trend line here. So what I would want to, based on the story that we just told ourselves in terms of what we can expect price to do. Well, look at this is the protected low that we were looking at. We're expecting price to at least hold this low. So here is my expectation of what I would be looking out for, right? I would want to at least see price come down into this zone. So let me zoom out a little so we can see all. So if we have the markets continuing to make lower lows and lower highs, respecting the bearish move, so lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, which is why I was looking to take advantage of a new lower high to make a new low, right? Now, that said, if we continue to make this low into this region, I want to see price at least tap into this area or maybe even deeper, something like this, right? Now, at this point, what I will be looking for is when price is within this range, I'll be looking for bullish confirmation. Mind you, I'm not going to start buying because remember, I like to trade with confirmation. So what it means is if my LSE comes into this zone, maybe it might come down into this area, maybe it will tap once it taps this line I drew here. So for me, once it taps this line, I will be interested in watching price, right? So what I will want to see is for price to probably start ranging within this region and then maybe break out. And then when we have that breakout, I'll be looking to buy, right? So this is the sort of confirmation that you hear me talk about when I say look for confirmation, wait for confirmation. It can be trend line break. It could be price action, rejection candlestick. So maybe, let me delete this. So let's say the market comes down into this area and then we have an aggressive, bullish engulfing candle or maybe a bullish pin bar, something like this, that would then serve as confirmation. That could be your confirmation. You could then look to put your stop loss below the low, target highs, right? Now, that is what I mean by confirmation. But it's not just looking for confirmation anywhere. I want to see price tap into this area at least, if best even to probably come down into this area, but not take out this low. If price were to take out this low, I am not interested in buying, right? As long as price respects this area, I would want to see some sort of ranging. That ranging market could be an accumulation schematic, which I could then look to buy and take it higher. Now, for those of you who are on the Telegram channel, I will be explaining this setup. If a setup starts materializing and there was potential trade, I'll be calling it out to you guys as well. Okay, so that would be my outlook on EURUSD for the week. Now let's go to my next favorite instrument for the week, which actually probably my favorite one I'm looking at, which is UJ. So UJ as a USD JPY. So UJ is am I not spelling it properly? USD JPY. Okay, now USD JPY is one that I've been talking about for a while, not just USD JPY, actually the majority of the JPY pairs. You can see this, so notice how you can see if you zoom out. Now there's a bigger reason for this, and I feel price is still probably going to go up. However, I'm trying to play the retracement game and probably take advantage of a short-term trade. Some 200, 300 pips retracement move in the market. Now, if you want to see the real thing here, just look at the weekly chart. If you look at the weekly chart here, you'll notice, okay, I'm not sure why this is, okay, it takes time to load up. Can you guys hear me? Okay, so if you look at the USD JPY here, what you notice is, so this is the sort of thing I was talking about on the EURUSD, right? Although that one was the weekly chart, this one is on the schematic is clear here on the daily chart. Now notice something here. You could see the market was dropping down for a while, and then you will now have this kind of wake up accumulation and the market broke higher. This is where the market shows the actual direction it wants to go towards, right? By this break higher, right? So making this or showing us this SOS or sign of strength, the market shows its hand. Now, see how long it took several, this is since 2017. For several years, the market was coming down, only to do what? Come back and tap into that zone. Notice that even this whole push, the market failed to take out this low. So it's that sort of low that I'm looking at on the USD, EURUSD, that if the market is really interested in going up, if our analysis is correct, then the market should at least stay above that low there. Now, so in the same way, the market came, just for those of you who understand how that block, the market just came closed into some of the last price pocket that was left there, pushed up higher, came back down, and then we ran up to the moon. So while a lot of people were looking at this, so for example, when the price was here, which was somewhere like here, and people were looking to sell to this, I was actually looking to buy. I was accumulating buy positions from all these areas. I knew that this liquidity was going to get run. I was expecting price to at least come back to this area. And so, price has delivered to us. Now, here's the thing. I do expect that we could see some sort of retracement, some sort of pullbacks in this market for a number of reasons. One, we overstretch, but that is not the main thing, because this kind of overstretched market is where a lot of people get, what I call it, milked out of the market. So people see the market like this. Overstretched, overbought condition in themselves are not really valid if you don't understand the schematics of where price wants to go. So for example, something like here where the market made this high and maybe did this bearish candle, I'm sure a lot of people started selling aggressively, probably put their stop loss above here. And what the market do? Well, the market ran their stop losses, clear it out as liquidity, right? So we could expect such a thing to happen a few times, where the market would engineer liquidity, run the liquidity, maybe continue moving higher, do the same thing again before deciding on where it actually wants to go. Okay, so now for UJ, I'm looking for some sort of short-term trading opportunity to look to probably sell this and take it lower. Not necessarily looking for this to become a bearish market, but even if we can get 100, 200 pips from this for the week, that will be fine. Now, mind you, the part of this resistance for price is to continue to go on higher. So whatever trade you're looking at, you know that aggressively you're trading against the trend. So you don't want to now go and stack up lot sizes against this, because the market could just be engineering another liquidity to then run it and take out your stop losses. Now, so what you want to do, or what we're looking for, is a story to trade. Now, when we drop down, or what I'm looking at for this week is, if we look at the 4-hour chart here, you won't see much. Look at the 1-hour charts here. You would see that we're beginning to range, right? Now, this range can be a distribution schematic. It can be a reaccumulation for price to then continue to go higher. However, even price, a market, a space that is just moving 50 pips, 100 pips, we can look to capture movement in the market. And so what I'm looking at for here is this. So if you look at this, we broke down here. So we broke below here. I got in on this trade. I think I told you guys about this. We got in on this sell. It was nice. I was looking to take this even further, but I already partialed out already, so that was fine. And then the market started ranging higher. So what I was looking at is to see price come back up into this zone. We didn't actually get up to that zone, but then we started breaking down lower. So what you notice here is you will see that price started making, you'll see this clearly on the 30 minutes or the 15-minute chart: lower lows, lower highs, lower lows. So I'm looking for this to make a new high and then go down lower. However, well, the market doesn't have to do what we want it to do. It's going to do what it wants to do. So what we want to do is then follow the market. Now, for this, I think I sent this one out also on the, let me see. I sent it out also on the Telegram channel. I sent it out on the Telegram channel earlier today when price was here, right? So I was expecting to see price come back to this area and then look to drop down. So this is a 30-minute chart. But so far, the market has not gone up yet. It could still potentially go up. It may or may not go up, but I'll be looking to sell this here. Now, here's how you can be looking to play this out. So let's drop down to the 30-minute chart so we can see the same. We can see the trend clearly. So you could see what I was looking: lower lows, lower highs, lower lows, lower highs, lower lows. So even if you're looking at this from the concept of Elliott wave system, we could have a impulse wave. So our wave 1, wave 2, 3, 4, and 5. So we can now be looking for the correctional wave. So now this is 30-minute chart, obviously. So we can now be looking for the correctional ABC move. We could have that ABC move before we continue down lower. Now, the market doesn't necessarily have to do that, but that is what I'll be looking out for. Now, the other way another opportunity I'll be looking out for is this: if the market breaks this low. So let's say price doesn't get up here and price decides to stop here and go down, that is fine. This will now be the new high I'll be looking at. I'll be looking to see price retrace into like the 61.8 fib level, 61.8, 78.6 fib level, and then look to sell this down at least to this low here. So that's the story, that's the idea. I'm either waiting to see this low get cleared or see price come up to this area, look to sell, stop loss above this high, and look to target this low as our take profits. Remember, if price were to break down from here and you decided to look for selling opportunities, say somewhere like this, and remember that you need to keep your stop loss just above that high, this most recent high, because that will negate, if price were to go above this high, to negate, it will more or less break out of this range here. So if this were to break down, so remember this outlook is, if we get a breakdown below this low, I'll be looking to sell on the 618 or the 78.6 fib retracement. Otherwise, if price were to continue to, if the Elliott wave system is complete and the market moves with 1, 2, 3 and comes back up here, I'll be looking to sell from here, stop loss above here, take profit down here. You can see this is our risk to reward is almost 1:4. Our risk is going to be 16 pips, and our target is going to be like 63 pips. Now, there's a way I look at my trading. This might be my first target. So some of you who join me in my classes, you know that I partial out of trades a lot. My first target might be down here, and then I could allow a portion of the trades to keep running and manage the trade accordingly, right? Now, on trade management, I'm going to be having a class this week. I think it's going to be for exclusive for clients only, where I'll be talking about trade management, at least from the way I look at it, from the way I manage trade, would be useful for you, because there are several times where the market, learning to manage your trades is very, very important, so that sometimes the market doesn't go your way and you don't make a loss. There are several times I take a trade, the market doesn't go my way, but because of the way I manage my trade and because of the way I look at the market, doesn't necessarily mean I have to go. It doesn't necessarily mean I take a loss, because I manage the way I partial out of trades. I manage the way I move my stop loss to break even. What are the criteria that I look for that? I'll be explaining that as well. So if you've not funded your accounts, do so and join me in my classes. Now, UJ, very, very interesting. I'm sure we're going to likely see one of these playouts. We'll see how that one works by the end of the week. And then we had, I think that was AUDJPY as well. So AUDJPY was the time. Now, because we're running out of time, if you want me to look at any particular instrument, please type that in the chat box and I'll look at that. So this will be the last one I would look at before I'll take one or maximum 2 instruments from you guys and analyze. Now, AUDJPY, I'm sure some of you saw this one on the Telegram group. We were looking for opportunities to buy, right? I think that was it here. Let me just, if I could just go back up. Yeah, that was it here. So AUDJPY. If you look at this here, you see our 4-hour projection. We're looking for opportunities to buy. This was the chart. This was where price was. We're looking for this continuation. However, I also mentioned that you could look for, I think here, you could look for counter trend line trades to sell back toward this zone, right? Now, our buy trade did not go as planned. But here's the thing, you shouldn't be in that trade. You shouldn't make a loss from this trade, because look at what we say here. We were looking for confirmation, right? Now, if you go back to the instruments, there's a reason I'm highlighting this, even though this is private content. I did cut in on a sell here. It was a beautiful trade, right? It was a very beautiful trade. It was like 200 pips gain for me. I was in Port Harcourt when I took this trade. I think that was Thursday or Friday, something like that. Now, but the main thing is this: we were looking for buy opportunities. We said we should be looking for sell. You could potentially look for sell opportunities to this zone and then look for buy opportunities. So the market broke down. We have the break of structure. I sold from that area, took out a good chunk of profits. I allowed some to continue to run. Remember, I talked about the way I manage my trade. So I still have some open position here that are running on profits. But while price was here, I was looking to buy. But like we mentioned, so if I go back here again, you'd see that you want to pay attention to the highlighted area and be looking for buying confirmation. So buying confirmation is the highlighted word here. And what is the confirmation? Now, if we go down to the 1-hour chart, not 1 minute. If we go down to the 1-hour chart here, like I mentioned, I said you could, we're looking to trade this based on the forex setup. However, we're looking for confirmation. Now, notice what price was doing. For making this high, not this high actually, for making this high here, you could see how the market has since then continued to make lower lows, lower highs, and lower lows, lower highs, and lower low, and lower high. So as price came into this region, immediately price tapped into this area. I was interested. I had my strat alarm set, and then I was looking for the market to break higher. So when price made this move, I wanted to see price hold this low, because then, maybe make a new low like this that is higher than the previous one, and then make a new high. It's when it does this that I'll be interested in looking for sales to then go higher. But here's what happened. There was no confirmation. What the price continued to do instead? Well, it continued to drop down, making lower lows, lower highs, lower lows, and lower highs. And it made out a new low and a new high. All of them still lower. So there was no trade confirmation here. There was no reason you shouldn't be in this trade, right? Because we were waiting for confirmation, which did not occur. And in which case, well, there is no trade. So the reason I like to explain the market like this is such that when you approach the market in this form, you know that you're not going to be right in all your analysis, but you're not going to make losses. You're going to make a lot of losses if you have trade setups and biases as to how you trade the market, how you get in and how you get out based on rules. So we're looking for confirmation. There was no confirmation, at least from the way I look at it. Now, if somebody, let's assume you were looking, some other person might have some sort of confirmation. So even if you drop down to 15-minute chart, right, there's still no confirmation on this trade. The market's just clearly made lower lows and lower highs. So confirmation, what I like to do, if you're using price action, you want to combine that with something like a trend line break. So for example, if you had this, something like this, let's say you use, let's say price came into this zone and you had this bullish engulfing. You want to see something like a trend line break. You want to see price break this trend line, and then you could look to buy. Personally, I usually look for break of structure where the markets, instead of from making lower lows, lower highs, lower lows, lower highs, I want to see it make a higher low and then a higher high. Then I can look to buy from here and then look to take it higher. Okay, so for this particular one, it's not about whether there's a trade opportunity for the week. I just wanted to explain this setup and how this kind of looking at the markets from this way would enhance your trading and help you to get into profitable trades, reduce the amount of risk you have per trade, and maximize the potential reward that you're going to likely gain on the market. Now, going back to this pair, you can see I have this PL here, which is more or less my protected low. Price is dropping into this zone. I want to see how the market react around this region. Actually, it's more of let me bring up this. I'll just put this here. So it's more of this region. Right, so I want to see how the price react to this region. If price is interested, because remember the trend is still bullish, at least long term. This is still very, very bullish long term. You can see price has been making clear higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, an exponential high, a higher low, and then also this is our new higher high. So as long as we don't take out this low here, then if we find confirmation within this region, I'll be looking to buy it up to these highs. Now, there's no guarantee that would happen because price may want to take out this low. So I will not get in on the buy trade if there's no confirmation. And if price were to take out this low here, I'll be looking for sells instead. If price take out this low, any retracement back into this region, I'll be looking to sell this, to take this much lower. That is the way I'm approaching this, right? Now, if we take out this low, I'm going to be looking to be a seller. If we don't take out this low down here on AJ, then I am only going to be interested in looking for buying opportunities with confirmation. Okay, so that will be all for me for this particular session. If you want me to look up any particular instruments, please feel free to let me know. Okay, so remember, if you want to join the Telegram class, the exclusive Telegram class, you need to have a funding account. I don't see why anybody should not have a funded account, especially if you're trading on the platform, because we are rolling out huge content for you. But I mean, in terms of EA devolution classes, you have private classes to trade with me, and you have other things. So reach out to your client, reach out to your account officers. If you funded your account, they will add you to the Telegram channel. If you funded, remember it's only for funded clients, so your account officers will gladly add you to the channel as well. Okay. I hope that's clear. Chinedu, you're asking for GBPUSD, so I'm going to take GBPUSD, and then I think that will be okay. So GBPUSD, if you want me to look at any other particular one, drop it. I think I have time for two. So Mr. Silvanus, just reach out to your accounts officer. If you meet the criteria, you'll be added to the Telegram channel. Okay, cheers. Now, GBPUSD, also quite similar to EURUSD. Okay, so now we have tapped into the zone. We have sliced through the 2020 pivots, right? And which is good. So let's look at this from the daily chart. I've not traded this in a while, actually. I was looking to see how the market reacts from this area. There was no reaction yet. So, but this has been done. This missed pivot served as a reason for me to target. So I'm sure I don't know if you guys remember. I'm sure some of you do, might or might not do. But you remember some of the sell trades that I had from here, not buys. We were talking, I think if you go back to the Telegram channel, not Telegram, to my YouTube channel, you would see analysis I did on this pair, why price was all the way up here, right? And we were looking to sell. I told you we got in on a sell trade. I got in on several sell trades. My final target was this 2020 yearly pivot. So on Friday, all my trades, I think I had about 3 trades from this split. I think I had trade here. I had about 3 trades. All the trades were closed for full CP at that area, and that was the reason. Now I'm vexing for myself that I should have allowed some to continue to run, but it's fine. I made, that one was over 800 pips. I think it combined over 2,700 pips from 3 trades. Now I have closed out several of the positions, so I think I closed out most of the volumes. What was left was just a few, I think 0.04 on some of them, 0.02 and all, but it was free money that was being handed to me. Now, from where we are now, I really don't want to force anything. I feel we are overstretched to the downside. We could potentially be looking for buying opportunities, but I don't want to have to force it. So this one is done, so we can have that cleared from our charts. So what are the potential areas that the markets may want to come back towards? Is, well, we have support down here or supply zone down here that we could be potentially challenging. Now, that is an area that you might want to keep in mind. You want to probably look for buying opportunities. So actually from current price, right, you could actually start looking for buying setup. If I'm not, from current price, you could actually start looking for buying setup. Now, not saying buy. I'm not saying start looking to buy. I'm saying looking for buy setups. Now, let me tell you something about the market, something I've noticed from experience. Many times, let's say we have a level of what you would call resistance, right? So let's say we have this line here, and it's supposed to be resistant. The way the markets approach that resistance, in many cases, can give you an idea as to what the market will do next. Not all the time, but what I figured out is that when the market, let's say the market is approaching a level such as this, if the market starts going, let's say now start making aggressive bullish candles toward that area, what usually follows is a drop, right? So if the market is approaching a level, right, in most cases, if the market wants to actually break that level, what will happen is, if it's going up, and it gets to that level, it will start ranging, and then it will break the level. However, sometimes when the market makes this big bullish, move, big bullish push into a region, what then happens is, let's say we can have, the market push up high to then end up closing back as a pin bar and then running down, because all of those things will just be engineered liquidity. When people are looking at this, they're like, oh, it's going to continue to go high, it's going to continue to go high, and then they're also getting excited, it's going to break this level, and they start buying, and the market crashes. So actually, this is one that I quite like from where we are now, especially with the way the market is aggressively pushing down. Now, from where we are currently, I would like to start watching. I would set the chapter now. I'm just let's see. I just want to see this. I'm going to set an alert on this. So the market comes here. I want to be alerted. So as long as price does not, even if it breaks below, right, I want to be watching for watching this area, because you could see how imbalanced this is. This is very, very imbalanced. And if the market, where the market is to find a strong support or resistant, or what do you call it, demand zone, we could find ourselves with some bit of trade. Now, it might not be a straight up trade. The markets might, start accumulating here, ranging for a while, maybe even breaking down a little bit lower to then go higher, right? So, but here's the beautiful thing: you don't need to make, to follow the market and trade it up. Just a push back up, just a a retracement of 100 pips is enough for you to capture trades. You know, if the market were to just do something like this, maybe come down here and then go back up here, that's, if you're able to capture that, that should be more than 200 pips already, right? So you don't need to make all of this to make money, right? I'm sure you know that already. Now, so I like where we are now. What I'll be watching out for this week now is to see if we could get structural shift. So let's look at the 4-hour chart. If we look at the 4-hour chart, this here now, you'd see that we are extremely overstretched. And I like this, right? I like this, at least in terms of looking for buying opportunity. There's just one straight move. I'm going to look at the 1-hour chart. It should still be the same thing. I'm looking for structure. I can start looking for break off. So let's look at a 15-minute chart. Now, here's what I'd like to see. I would want to see price. So you can see that we're clearly bearish, making lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, right? So we're doing this constantly. And this is the most recent high, the most recent lower high, and then we've made a lower low. Now, I would, within this region, I like this. If we were to start making new highs that were higher than previous highs, that would be fantastic. I'll start looking for buying opportunities. We can even come up to this area. If we tap into this area, you know, that will also be interesting. Now, notice the points I'm making, right? Because a lot of people get it confusing. Price might start doing something like this now. Maybe price may start going up and they're like, okay, it's ready to start buying, and they start buying and the price goes down. You can see that there's still no structural shift. This is still a lower high, at least compared to this one, right? So if the market does something like this, well, there's no trade to be taken. However, if the market now starts doing something like this, where it now takes out previous highs, start taking out new highs and making higher lows, now you can start looking for buying opportunities. Remember, this is the 15-minute chart. We're looking for opportunities to trade this back up. Now, surely you would be looking to, you know, manage your trade, which is something I'll be looking about in terms of trade management in our class that I'll have, I think probably this week on Friday or so, or maybe one of our cutting-edge class I'll have a small session on trade management and all. So sure, you might be targeting higher prices, but you want to figure out a way to make profits. Price should not move your way, and then you end up making losses. Okay. So we have spent quite a good amount of time, and we've discussed a lot of instruments, a lot of opportunities potentially in the market. We looked at EURUSD, we looked at UJ, that's USDJPY, we looked at AUDJPY. We also looked at USD, GBPUSD, while also analyzing that for DXY. Okay, so there are actually lots of setups. There are a lot I'll be talking about more in our classes. So tomorrow in the cutting-edge trading room classes, we'll be looking at all the instruments and looking for trade setups, live trade setups that we can look to play out, right? And then anybody want me to look at any particular thing? Okay, so yeah, I'm going to stop the recording now.